I think on the upside, you could see it move past that into the 250 range if you get an extraordinary series of events. I imagine there are tail events that would push it even higher than that. And of course, Bitcoin is hugely volatile. We regularly see 20, 30, 40% pullbacks. So you could see it retrace down to the, 70 to $90,000 range. But I don't think that's likely, to be honest. I think we're finally escaping the gravity of $100,000, which has sort of been where Bitcoin has been pinned for the past 6 months. And I think as we do, we'll start to move up toward that $200,000 range. But of course, there are tail events on either side.
Matt Hougan starts his research by highlighting what he calls a unique occasion in market history, a confluence of several forces propelling cryptocurrency forward simultaneously. Not just one driver, but a number of strong patterns coming together. Regulatory clarity is the most important factor. According to Hougan, after years of regulatory barriers to cryptocurrency, regulation has now changed from being a hindrance to a significant advantage. And it, in his opinion, alters everything for digital assets going forward. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Over the past year, more so than I'd ever seen you, and now you're telling me you're more bullish than ever. So explain yourself. What's going on right now? What's your outlook for the rest of the year?
Yeah, we're very optimistic for the rest of the year. Look, you have a trio or maybe 4 or even 5 positive tailwinds pushing crypto forward. You mentioned one, which is the sea change in the regulatory environment. That started with the November elections, but it's accelerated throughout this year as the new Congress and the new administration has delivered on its promises. And those include pulling back all the SEC's lawsuits, which were against the crypto industry, allowing for crypto firms to have banks, moving forward on stablecoin and market structure regulation, establishing a U.S. strategic Bitcoin reserve. Regulation was a huge force facing crypto for the previous 4 years, and now it's a massive tailwind. But it's not just that. You look at other things. We're seeing a one-time asymmetric entry of institutional capital into the crypto market. The Bitcoin ETFs were the most successful ETF launch of all time last year, attracting $36 billion in assets. One of our predictions for this year is we're going to exceed that, and we're seeing inflows into Bitcoin ETFs dramatically accelerate. So you have institutions buying, you have a positive regulatory development, and now we have this third major force, which is enormous optimism about stablecoins and tokenization, which is lifting up assets like Ethereum, like Solana, like Chainlink. So if it was primarily a Bitcoin story in H1 and in 2024, it's now a broad crypto story across Bitcoin, Ethereum, Solana, Chainlink, crypto equities, and more. It's just really hard to find a reason to be anything but very bullish. And I think that's why we're seeing prices hit new all-time highs. I think it's why we're seeing strong inflows, even during what's usually a slow summer season. And I think the fall is going to be very exciting for crypto indeed.
So if you had to cut it all down to a single bold call for the rest of the year, what would you say?
Yeah, Bitcoin over $200,000. I think that's our highest conviction bet.
Wow.
We're at about $113,000 now, but as you and I have discussed, there is this structural mismatch between demand and supply in the Bitcoin market. The Bitcoin market only produces 165,000 new Bitcoin each year. Corporations like MicroStrategy and its peers have already bought close to 300,000 Bitcoin. ETFs have bought somewhere north of 100,000 Bitcoin, and flows are accelerating. There's just more demand than supply, and if that happens, the price has to go up. We've already seen it so far this year, but I think we're accelerating. So Bitcoin 200K would be the cleanest call and probably our most high conviction call here at Bitwise.
So if you were shocked, give me an upside and downside to that 200,000. What's the worst you would be amazed at, or the highest you'd be amazed at?
Yeah, I think on the upside, you could see it move past that into the 250 range if you get an extraordinary series of events. I imagine there are tail events that would push it even higher than that. And of course, Bitcoin is hugely volatile. We regularly see 20, 30, 40% pullbacks. So you could see it retrace down to the, $70 to $90,000 range. But I don't think that's likely, to be honest. I think we're finally escaping the gravity of $100,000, which has sort of been where Bitcoin has been pinned for the past 6 months. And I think as we do, we'll start to move up toward that $200,000 range. But of course, there are tail events on either side.
Hougan also raises an intriguing argument on the psychology of investors. Why did Bitcoin take so long to surpass the $100,000 mark? Human conduct was the problem, not merely technical obstacles. When purchasing Bitcoin at $10 or $100, many early investors had set large, round sums as their sell targets. Additionally, the most popular limit order on sites like River was $100,000. The market has been working through that wave of early sellers before rising, which is what we have been observing for the past 6 months. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Yeah, we're really watching three things. So first, you have the stablecoin bill. The stablecoin bill would put stablecoins, which are US dollars that move over the blockchain-based rails, on a firm regulatory footing. If we get passage of that bill, which has already gone through the Senate, where it achieved, I think, 68 votes, one of the most popular bills in Congress this year. That's an important fact. Crypto is actually a bipartisan issue with support from Democrats and Republicans. It got 68 votes in the Senate. It's now with the House, and then it will be signed into law. That will bring a huge amount of institutional interest into the space. So we're watching that progress. The second is the Market Structure Act, which would define more clearly whether the CFTC or the SEC governs crypto and what are the rules of the road. Having that in place will dramatically reduce the risk of future blowups in the crypto market, which have been a big headwind for crypto historically. The crypto industry has been asking for regulation because good actors know that they will thrive under a reasonable regulatory environment, whereas in the previous environment with effectively no clear regulations, you had things like FTX bubble up. So I'm optimistic that we'll get that through. And then from an investor side or an investment side, the SEC is looking to develop something like generic listing standards that would allow us to launch lots of different crypto asset ETPs and index-based ETPs more easily than we have in the past. And that just means that hopefully by the end of the year, crypto will have broad engagement from Wall Street. It will have a firmer regulatory footing with fewer blowups, and investors will have more choice in how to express their views on crypto. That's a pretty great combo, and I have a high degree of confidence that all three of those things are likely to happen from a policy perspective by the end of the year.
You're talking about it doubling in price over the next 6 months. Why hasn't it done that over the past 6, given the inflows into the market?
Yeah, I mean, leave it to Bitcoin investors to be frustrated with a 20% return in 6 months. And, an annualized 40% return is flat in crypto terms. That's a very classic Bitcoin perspective. But I get it.
You see that all the time, don't you?
Definitely. If it's not up 100%, it's down. I get it. It is the case that we've had these massive purchases by companies and by ETFs and indeed by governments that have been vastly more than supply. I think the answer, Rick, is behavioral, which is, look, 95% of all Bitcoin is already owned. So these ETFs and companies were buying all the new supply, and then they were buying Bitcoin from existing holders who had purchased it earlier. And the reason we were trading sideways is we were right around a big fat even number, which was $100,000. And people are people. I think people were willing to sell some of their Bitcoin at $100,000. If you go on platforms like River, which is a tool many people use to make long-term allocations to Bitcoin, the largest limit order positions historically have been at $100,000 and $1 million. Just because people are people. They may have bought Bitcoin when it was 10 bucks, and they're like, I'll sell it at 100K. And so you can think of what we've done over the last 6 months is working through that inventory of people who are willing to sell at the big round number of 100K. I think what you're seeing today is that demand is starting to overwhelm that inventory, right? We're starting to break away from the gravity of that $100,000 number. Part of the reason we said 200,000 is it's the next big round number, and we think it's going to be a gravity pulling people up there. Yeah, it's a great question. If you're buying in an ETF, all the same rules apply as any other ETF, which is don't use market orders, use limit orders. If you're buying in size, call up the issuer or a market maker to help arrange liquidity, because the underlying Bitcoin market is extremely liquid. And if you have proper order hygiene, you can move hundreds of millions of dollars of Bitcoin at very fractional marginal costs. If you're operating on a traditional centralized or decentralized exchange and doing it yourself, the same rules generally apply, right? There's nothing different about Bitcoin. You should trade during periods of the market when the market is liquid. You should use limit orders where possible. Maybe interface with an institutional trading counterparty if you're moving in size. Maybe chop up your trade over time. It's literally all the same things you do in stocks and bonds and ETFs. Just do it in Bitcoin as well. It's the same. There's no magic sauce here, Rick.
In conclusion, Matt Hougan reminds us that Bitcoin and the cryptocurrency market as a whole are about actual acceptance, significant money flows, and shifting investor behavior, not simply hype. Although many investors may be annoyed that Bitcoin only returned 20% in 6 months, he clarifies that this is an annualized return of 40%, which is unprecedented in conventional markets. The sideways movement around $100,000 was psychological, not a sign of weakness. Early Bitcoin investors waited to cash out at large, round sums like $100,000 after purchasing the cryptocurrency for $10. That flood of sellers has been absorbed by the market during the last 6 months. However, that selling pressure is now beginning to be overshadowed by demand from ETFs, institutions, and even governments. To put it another way, Bitcoin is escaping its $100,000 weight and heading toward the next significant milestone. Additionally, Hougan emphasizes that trading Bitcoin isn't as difficult as many think. The same rules that apply to stocks or ETFs also apply here. Use limit orders, trade when markets are liquid, and if you're moving huge sums, break up large deals into smaller ones. It's not a magic trick. Since Bitcoin is a financial asset, it needs to be managed just like any other. Beyond Bitcoin, he likens the future of cryptocurrency to the evolution of emerging markets. Funds first concentrated primarily on large-cap firms, but as the market developed, they also looked at mid-cap and small-cap firms. Crypto follows the same course. Although major assets like Bitcoin and Ethereum will continue to dominate, a lengthy list of smaller projects, such as DeFi protocols and blockchains connected to artificial intelligence, may present special opportunities as the industry expands. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.